All right, everybody. Welcome to the No Shill Zone. Gareth Soloway, Ben Cowen. How's it going, Ben?
Pretty good. How about you?
Good, man. Good. We were chatting a little bit before we started this broadcast, and I was curious, and I asked Ben about what do we have going on with the dominance, the Bitcoin dominance? Because last Monday on the No Shill Zone, we talked about how Bitcoin dominance was likely at a breakout point, and it was likely to go higher. And I think if I remember correctly, Ben, it was at 49 and change percent, right?
Yeah, something like that. I think it had opened the week at 49.11, I think, or so. Or somewhere around there. 49, maybe 49.65% or something like that. But yeah, it was just below 50%. And we talked about how we were likely going to see a pretty significant move this past week. And interestingly enough, here we are at almost 51.5%. And I believe we tagged 52% briefly on one of the days. So it is interesting to see that breakout. What's your takeaway from what's going on here with the dominance?
Yeah, I think the dominance just kind of reiterates how the SEC is going after so many of the alts and calling them securities, and it's basically a combination of people being very hesitant to put money into the Cardanos, the Maddox, those kind of things, and saying, okay, well, which one's the safe one? Where the SEC's basically said it's not a security, that's Bitcoin. Then you throw into the mix that kind of the news from BlackRock over the last week where they're like, hey, we're going to file for a spot at ETF. And we have actually seen multiple other big Wall Street financial institutions filing for these Bitcoin ETFs. So it does seem like everyone that's giving confidence to people being in Bitcoin. And that dominance reflects that, I think.
Yeah, I think it's sort of just that phase of the cycle that we're in, right? Where the fundamentals of various altcoin projects don't really matter so much if we're just in the phase where Bitcoin sucks in all that liquidity back up. And it really does seem like we're in that phase. And one thing I thought, and we were talking about this earlier too, about the dominance is I think a lot of people are sort of used to the idea of low Bitcoin dominance because they joined crypto kind of after Bitcoin had its parabolic rally in late 2020, early 2021. But the thing that I can't, get past is if we can go from 60% to 48% in 4 weeks, why can't we go from 48% to 60% in a very similar time period? And I think that sort of goes back to what we were talking about as to getting that move up to that 60% level. One thing that I wanted to talk a little bit about with you is, I know that we can talk about the lower highs with Bitcoin dominance, and this is what everyone talks about, right? Like everyone is a huge believer in the lower highs by Bitcoin dominance from one cycle to another, and it's pretty obvious, right? I mean, it was like 95%, and then we hit 73%, and so the idea, of course, is well maybe it only go to 60%, but there's this one thing that kind of keeps bugging me, and it's the fact that we also have higher lows.
Yeah.
And I think this is something that I don't think should go overlooked. This low here in 2018 was at 35, but this low in 2022 was at 38. And so I'm so curious, what's the more important trend here? Is it the lower highs, or is it the higher lows? Or another way to look at it, I'm curious what you think as well, is this sort of just the initial, I don't know, capitalization of the altcoin market? And then do you basically just have an oscillator where it kind of goes between these two ranges back and forth? I'm curious as to what you think about that.
Yeah. So I'm kind of in the same concept that what we have here in technical analysis is called a wedge pattern, which is higher lows and lower highs. And so it creates, and you can see I have a couple of the other lines. This was the breakout line we discussed where it was clearly breaking out once it got through that like 49% level. And then this is kind of the target zone that you and I agree on, which is that 60, 59%, where you have pivot point, and then that creates that trend line, and then the downsloping one going back to the dominance prior. And I think you made a great point is that so many of these investors have come in after 2020 in terms of Bitcoin. So they don't remember a period when Bitcoin dominance was so massive, so dominant, if you will. And I think it's important because people are like, oh, well, the alts will at some point rally back. And that may be the case, but it may be longer than people think. And Bitcoin may be more dominant for a longer period of time. One thing on and I know you have some amazing charts to show on kind of like how many views things were getting during the 2020 kind of period when so many people came into Bitcoin. But when you have a wedge pattern like what we have here, the ultimate aspect is that you're going to get eventually these two lines, and I'm going to get rid of this one as well. But you see these two lines, and if I go to my weekly chart, you can see it even more so. Eventually price. So these two lines will meet at some point in the future, right? A triangle, you have the two lines getting closer and closer. And what that's going to cause is it's either going to cause a breakdown or a breakout. In this case, I would not be surprised to see a breakout in this scenario. Granted, it could still be 3-6 months away, but at some point, a wedge pattern like this is very likely to break out to the upside. So 60% will be resistance, but don't discount the possibility that it could eventually break through that and go back to previous levels that we haven't seen for years. And that goes back to kind of what I'd love for you to show. Let me show your chart here, is kind of the numbers in relation to how many people came in when Bitcoin dominance was already collapsing. And I guess the highest it was ever since your chart is showing when those massive spikes was 2021, and the highest it was about 72%, and it was collapsing, right?
Yeah, so this kind of takes me back in April when a lot of, if you remember on Twitter, like alt season was trending on Twitter. And it was one of those times where I was looking at this chart and I'm like, well, back when we actually had real alt season, where the dominance of Bitcoin cratered from like 70% to 40%, we had a massive influx of new people coming into the space. So if you're not familiar with this chart, it's just showing new YouTube views for a lot of different cryptocurrency YouTube channels that existed, all the way back in 2019. There's a lot of channels on here. And, I don't really have to go too far to pick on anyone specific. I can just pick on myself. And if you just look at my channel alone, you can see a lot of people came in, a lot of new views. And then as time goes on, right, like the views just sort of go down, but it's more or less across all channels, no matter what people talk about. Some people focus on Bitcoin, some people focus on altcoins, some people focus on the news while other people focus on technical analysis. But no matter what, right, you can see pretty clearly that before the major Bitcoin dominance plunge, we were only averaging collectively about 200,000 views a day, right? This was back in late 2019, 2020. And then we went from 200,000 views a day to then almost 3 million views a day collectively. I mean, you're talking an order of magnitude more views coming in. And so that was kind of, what I said back in April is, well, who's the marginal buyer of these altcoins when all these social statistics are going down, right? Not up, right? I mean, it's not to say, and again, like Gareth, I think you make a good point. It's not to say that the altcoins won't eventually recover, right? Like I'm sure there's some altcoins out there that if purchased today would yield a pretty good ROI 2 to 3 years from now, right? Like I'm not saying that isn't a thing. It's just in the short term, can you really expect, 500% gains in an altcoin when social statistics are actually trending down? And there's actually a couple other, you can look at YouTube subscribers to the same channels, right? And see a very similar chart. Look at all these new subscribers. We were averaging 1,000 or 2,000 a day. At the peak, we were averaging 40,000 a day, just to give you an idea of how crazy it was. And one more that might be interesting, and actually this is one of my favorite ones. This is people following analysts on Twitter. Look at this one. I mean, does it not call the peak at 69K? And it really just show you, right, like how, no matter the price action, right, we've still very much been in sort of the pre-halving year mindset where people just don't really care. And it's one of the reasons, I think, going back to the dominance as to why the dominance goes up. If retail doesn't care, right? If we can't get new people into the space, then there's going to be more people that are going to focus on the blue chips, right? They're going to focus on things like Bitcoin and or Ethereum, right? Those are going to go up in dominance generally, especially Bitcoin, and the altcoin dominance tends to go down. And that's just, I think, where we find ourselves, right?
And I think what's interesting about that point too is that if you think about the position that Bitcoin and crypto is in right now, you have the potential for regulation, but Bitcoin and Ethereum, when you bring in institutional money, they're not going to go and be like, oh, let's buy some Pepe, right? I mean, they're going to be focusing,
Right.
and remember, they have these fiduciary responsibilities for their clients to focus on the best quality, the safest. And so, really, you could actually see massive inflows of institutional money come into the space, which BlackRock is almost starting the thought process on, is that that'll actually increase Bitcoin dominance because so much big money could come in, and it's not going to go to the 50th on the market cap list. It just isn't.
Right. Well, the other thing too by the dominance is people need to remember that the dominance on TradingView includes stable coins. And stable coins now, I think, are around 115 billion plus or minus a few billion, which is a significant portion of the market cap. And you're talking about 10% or so of the market cap that did not exist back in 2018 or so, not to any same degree. And so one dominance metric that might even be more useful to look at is the dominance excluding stable coins. And when you do that, I mean, we're already, we're at that 54, 55% level already. You can see that we've taken out that prior high that we were at not too long ago. So I do think there's there's reason to look at it both including stables and excluding stables to just get an idea of how much is the stablecoin market actually impacting this sort of stuff. Here it is. I've loaded it up. You can see that the excluding stables, we're now at 56%. And I think the reason why that's important is because we talked before about breaking the range high on the dominance, right? This 49% level. And then once it breaks, it should move pretty quickly. Excluding stables, we also broke the range high, right? But we broke it last week. And so now that that's broken, I think there should be plenty of room to move higher. But I'd like to get your opinion on something a little bit more specific. And I want to talk a little bit about Ethereum here, because I have somewhat of a I feel very convinced in my own mind about where the Ethereum Bitcoin valuation is going. But I would like to get your opinion on one thing that kind of has me wondering a little bit. And basically what I'm curious about is, if you were to look at, say, like the monthly Ether Bitcoin candles, right? And let's just switch this over to Heikinashi to sort of better see the trend. I'm kind of still of the opinion that it's looking at like this. So you kind of have your initial move up, right? Your first move up, and then you get sort of your two distribution phases, right? 1 and 2, and then 1 and 2. And it to me, it still seems like the most likely direction for the Ethereum Bitcoin valuation is down, not because Ethereum is not a great project. I actually think it's probably going to be a blue chip, and I think it is a blue chip. But I just think that money is going back to Bitcoin. But I guess where I'm curious, and I'd like to get your opinion on something, my base case is that it's going to break down to about the 0.03 to 0.04 level. But I know you're a technician, so what do you think about, if you were to sort of connect the dots here, right? Is this pattern, doesn't it normally break to the upside?
Yeah, so let me show my chart here, and we can take a look at this. So this is my chart of Ethereum, and one of the things to take note of is you had this downsloping, which is what you were pointing out, this downsloping channel, right? So you have this line here and these, and it basically creates a parallel channel on Ethereum. We've broken above that, and we have sideways chop. Look at where it's occurring, right at that previous sideways chop area before we fell down. So yes, short term, these sideways candles are actually known as a bull flag. And then this channel is actually a bullish channel. So in this case, I would refer to this as a micro bull pattern within a macro. And micro means very small. So that's that 5 candle sideways action within the bigger macro, the bigger pattern as well. So interestingly enough, like you were saying, is at least for now, if you can break above Ethereum at $1,915, there's a decent chance that you could run maybe back to the 2130 level on Ethereum. So there is a side here where Ethereum may see a little bit of a run up. And that also brings in other altcoins. Is if Ethereum runs, do we see a bounce in altcoins? And one of the thought processes that I have is that we have started to see a little bit of a follow through where Bitcoin's gotten stronger and it's kind of trailed off. Now, I don't think you're going to get the same run in some of these altcoins as you will get out of these quality names, but it is an interesting little concept to think that there's money that eventually will say, okay, Bitcoin's had a run. Do we run back just for a quick bounce on some of these altcoins like a Polygon and some of these other ones?
What's interesting is will Ethereum outperform Bitcoin in that type of environment, like the Ether Bitcoin valuation? One interesting thing is like the 20-week SMA and the 21-week EMA for Bitcoin, they can provide support, in an uptrend. And what I find fascinating is how Bitcoin has held it for the duration of this year, which is not, I mean, we have stayed above it for half a year before, right? In 2019, you can see we stayed above it, and we didn't really fall back below it until Q3 of that year, which is sort of my base case that the second half of the year we could see the move fade. But what's interesting is that Bitcoin has sort of held the line here 2 times. But when you look at the altcoin market, and this is kind of what we were talking about, the altcoin market is still below that band, that 20-week SMA, 21-week EMA. And so I'm curious if sort of that bounce by Bitcoin leads to sort of a move back up by the altcoin market, but only just get rejected by the 20-week SMA, and then to ultimately go back lower. And that sort of leads you to a point where, Bitcoin kind of holds its own, sits at around 30K, maybe even goes higher, right? It could go 35K or something. But the altcoin market, even though Bitcoin is at its yearly high, right? I mean, the yearly high is around 31K. Total 3, the altcoin market is still 20% below its yearly high. So yeah, I mean, I think that you could always make a case that short-term bounces could occur, but I still think that the altcoin market looks relatively weak, especially
so weak. Yeah, no, I couldn't agree more. And for me, that's a shorter term trading opportunity, possibly. Just to give you a sense, and I'll flip back to my charts here, but going into a couple of the trades that I gave my members just in the last week, we were long Solana. We've already taken profits on Solana. We were in from this down here level. And basically what this was, if we look at the chart, I mean, look at that amazing support trend line right there, right? So huge support there, and that's where price came down to right here. And then it just got a bounce, and then I basically just said, okay, there's this down sloping trend line, and I exited about 5 or 6 days ago right here. But I still have a small position in Polygon, which is starting to flag as well. And basically what I'm looking for on this is, and I'm going to take away this one. So you have this area here and this down sloping trend line, and I'm just looking for a bounce into that. So we're basically looking at like 74, 75 cents. And then that's it for me, right? So I agree 100% that I think the alts, while they could get a little reactionary bounce, there's not something that I would be, at least for me, I don't trust these long enough term to hold them for anything more significant. Just trading vehicles for me.
Yeah, I think you're much better at these short-term plays than I am, honestly, because I know you like to get in and then sort of scalp it and then just get out of, like, recognizing that the overall trend is likely down, but that it doesn't go down in a straight line, right? It's more of a stochastic process. Did you have another chart?
Yeah, just Cardano real quick here. You can see Cardano's actually had a bounce, but look at where it's getting rejected, right at that previous pivot from March of 2023. If this can break through here, you have this down sloping trend line where I don't expect it to get above that one. So maybe we get back to 33 cents on these things. And by the way, folks, just to be clear, not financial advice for anyone out there. You got to do your own due diligence. These are quick trades. It's not for everyone. So just be aware of that. But again, for me, this type of thing, if it can break this 30-cent level, you probably have upside to 33 cents or so before it gets slammed back down. But actually, one of the things, I don't know if do you have another chart you want to show on this, or?
I want to show the same 2 charts that you just showed, but they're Bitcoin pairs, because I think that can help us identify the actual macro entries for, to actually flip the script long term, if that makes sense. So like, starting off with Solana. So the Solana Bitcoin valuation, I think is it's been a fairly obvious chart for a long time. I've talked about it in a lot of my live streams of the last year and a half, but it basically goes to this pattern where it puts in a low, it bounces back up to its 20-week SMA, gets rejected, and then just puts in a new low, right? And it just keeps doing that process where it eventually just breaks through the floor. And you can see that it broke through the floor yet again. And so, I'm thinking eventually that it's going to make its way down, to sort of this level down here. Now, one of the things I think that's hard about Solana is that this is only the first market cycle that it's experienced, right? It hasn't actually gone through a pre-halving year before. So it's hard to know exactly what a bottoming process would even look like macro. But I think we can learn something from the ADA Bitcoin chart. So the ADA Bitcoin chart is something that has experienced a full market cycle. And we know that crypto is very cyclical, right? There's your bull markets, there's your bear markets, there's sort of your pre-halving years where we kind of spend half the year going up, half the year going down. But ADA Bitcoin right now is at 950 Satoshis. Look where it was 4 years ago.
Wow.
Same exact level, right? Same exact level exactly 4 years ago. And what's interesting is that the Bitcoin top in 2019 occurred once the ADA Bitcoin valuation, I think, was at around 780 Satoshis or 800 Satoshis. So again, right, I'm still of the opinion that the majority of this move, or a lot of it, not all of it, but I think a lot of it is just that liquidity being sucked in from the altcoin market into Bitcoin. I'm not trying to say that no money is new, like I'm not trying to say that no new money is coming into the ETFs or into and sort of front running that kind of stuff. But I do think there's a lot of evidence here to suggest that, look, ADA Bitcoin was at the same level that it was back in 2019. And look where it was by the end of July. So 1 month later, it dropped from 900 Satoshis to 400 Satoshis. So 400 sats has been my goal, my target on ADA Bitcoin for about a year now. And it's taking a long time to get there. But we know these things just take a long time to play out. And to get back to the point of like, well, where does the macro change for the altcoin market? Look at what ADA Bitcoin was doing in late 2019. It was it was sort of holding its lows finally during a Bitcoin USD downtrend, right? So like Bitcoin USD was going down in late 2019 and ADA Bitcoin is sort of holding these lows. We're not at that point yet, right? We're not at the point yet where ADA Bitcoin is obviously holding the lows. And so that's why I think that the altcoin market still needs further time to unwind on their Bitcoin pairs.
So one of the questions I have for you, and I think this will be very interesting for people to hear, is like, so are you in the camp? I'm still in the camp where I'm like mixed on whether or not the 15.7 level was the low on Bitcoin, or if we're already ripping in the next bull market. And even though I think Bitcoin dominance, like weirdly enough, if we went into a bad enough scenario, Bitcoin dominance could still increase, but Bitcoin could test those lows again, right? I mean, just imagine if all these altcoins went down 75%, but Bitcoin only went down 50% or something like that, right? So the question I would have is do you see a scenario where that could happen? Is it a new bull market? What are your thoughts there?
Normally when the dominance rallies, like we saw back over here in 2018 and in 2019, like half of the move is normally accompanied by Bitcoin pump, and then the other half is normally accompanied by Bitcoin dump, right? That's what we've normally seen. So I'm still of the opinion that we likely will have a secondary scare at some point. My sort of base case has been sometime between Q3 and Q1 of 2024 is likely when we would see that. So yeah, I mean, I think you could get a scenario where you get, say, an uninverted yield curve because the Fed's forced to pivot because they broke something. And then that's when we figure out, is it a higher low? Is it a double bottom, or is it a lower low? And I mean, I think it's too early to know for sure. Last cycle, we were basically at 3,100 and we didn't even come close to testing that until 14 months later, right? I mean, It took 14 months to put in that higher low. For reference, for this cycle, that would get you out to February of 2024 if it took the same amount of time to sort of figure out that idea. And then the prior cycle, we got the double bottom in August, right? So you can see that Bitcoin actually went up and it found its high, its early Q3 high, and then collapsed into August. And then in 2019, it found its high in late June. So, I mean, I do, my base case is that we in the pre-halving years, actually, I have a chart for this if you want to, or a table that we can look at. So like if you look at pre-halving years, right? So like 2015 and 2019, you'll notice that I'm not going to go through and count them, but you'll notice that in 2015 and 2019, about half the months are green and half the months are red, right? In your bear market years, like your 2014, your 2018, and your 2022, you have about 8 or 9 of those months are red, right? So it's more obviously a bear market. You have 2014, 2018, 2022, obviously a bear market. 2015, 2019, and 2023, which are about half green and half red. And it's interesting because 2019, 5 of the first 6 months of the year were green, right? So the only month that was green or red in 2019 in the first half of the year was January. And so far in 2023, 5 of the first 6 months of the year have been green. But in the back half of 2019, 5 of the last 6 months were red. And you'll see some similar types of things with 2015 as well. So I think the pre-halving year is more or less a time to sort of wash out both the bulls and the bears, right? So you get, I just say, like, get both sides sufficiently wrecked, then we get our final scare, and then we typically go up into a bull market.
When we talk typically, I mean, one of my issues that I've been struggling with is like, okay, well, how many years of Bitcoin cycles do we have? What, 3 cycles in total? And then you have this scenario where the Fed just a week ago or a week and a half ago, they were like, hey, we probably are going to raise 2 more times. And then interest rates aren't going to fall for, I don't know, a year after that or something like that. Number one, do we believe the Fed? I mean, I personally don't really believe them. But what I do believe is that if inflation stays high, it handcuffs them somewhat, right? And then does that impact the cycles that we've seen since we have so few to go by? I mean, when you go to the stock market, you have 100+ years of cycles versus crypto markets. What are your thoughts on that?
Yeah, I mean, so I guess your question is will we always get a bull run after the halving? Is that
Right.
basically sort of the question?
Yeah, and I correct me if I'm wrong, but I was doing some research, and the halving is not gonna like it's not like all of a sudden it becomes so much harder to mine Bitcoin, right? Like I was reading something. Is it true that it's only like 5% harder or something like that?
Well, no, I mean so basically the block rewards get reduced in half every 4 years or so. But
Mhm.
I think the bigger issue is that it's going to have less and less of an effect as time goes on,
Right.
right? When you go from 50 to 25 or 25 to 12 and a
That's
half,
my point.
like it becomes not as big of a deal as time goes on. I think the other thing too that's existed so far is that it's always happened to correspond quite timely with Bitcoin, like QE, anyways, like QE, it's always lined up perfectly. And I think I think we could envision a scenario where that it could line up perfectly again. But I feel like if it's going to line up, we need to see the softening of the labor market relatively soon, right?
Right.
Because that process can take 6 to 12 months to play out, right? When the unemployment rate starts to go up. I think the issue is like, well, what happens if it doesn't really start to go up until early next year or even mid next year? Maybe everyone YOLOs into Bitcoin just for the Bitcoin halving, only for a recession to hit, right? And so I
Right.
think, yeah, like that. I mean, there should be some reason to be concerned about that. I mean, I don't think it's necessarily obvious that it has to play out in any specific
Yeah,
manner.
and one of my biggest issues, and this is something I've learned from stock trading and commodity trading, is that when everyone anticipates something, that's oftentimes when we don't see it happen. And I feel like when I talk to, I mean, right now there are so many bulls. I mean, for me being like a pseudo bear, thinking that maybe we haven't put it a low, the amount of like hate on Twitter is like at a contrarian level where it's like everyone is just like, okay, we're gonna buy Bitcoin because even if it goes down, it's okay because the halving next year will make us rich, right? And I'm like, okay, like like I've traded for years and I thought that way, and every time I thought that way, it didn't happen, and so it just like has me on edge, and I'm like, wait, it's never that easy.
Right. Yeah. No, it's funny because I mean I remember so in 2015 I was not very optimistic because I mean we basically in 2015 if you remember like Bitcoin we sort of crashed in August, and I mean this is when the chart looks like this, so it's not obvious that it's not just going to come collapsing back down, and I wasn't very optimistic. Last cycle, I was pretty optimistic, even going into the halving. Like I was pretty optimistic that we would go into a bull run. But I also remind myself that, there is this element of like, I was right about that, but it could have been I was right because the Fed printed $6 trillion, right? Like,
Right.
like what happens if the Fed doesn't do that, and again, like when the Fed prints that much money, you're going to have the riskiest assets go up, right? Because when there's more of that excess liquidity, it's those assets that'll go up. I think in general, though, look, there could be a future bull run where Bitcoin runs and altcoins don't run as much because there's just not as much excess liquidity as there has been in prior cycles.
Right.
So yeah, I mean, like I still would be on the side of it will likely trend back up in say like that 2025 timeframe, but I want to be open minded to the idea. Well, if the labor market doesn't soften between now and the halving, then that is going to be sort of something we have to be cautious about in the next after the next halving.
So I have one more thing I want to bring up, and I kind of want to discuss, at least in regards to crypto and a risk out there. And this is something that I've been kind of dealing with and thinking about, and it's this. It's Fed now, instant payments debuting in July, so literally within days. And for me, it's like, so Florida, I live in Florida, and Florida has already basically banned CBDCs, right?
Mhm.
So, and we know the term CBDC is like, it's like you don't want to touch it. Like no government official wants to even mention that term. But when I look at this and I say, wait, instant payments across, like I can send you instantly money, you can send me instantly money. Is this a backdoor to a CBDC basically? And then the question I would say is that like the SEC has been very quiet for the last couple weeks, right? And they came out attacking. I don't believe they're done. Like there is no way that was it. There's going to be other stuff, whether it's against Binance, whether it's against the rest of crypto. And the question is so many of these exchanges make you trade Bitcoin and Ethereum in USDT, right? Or USDC. What if all of a sudden you have this option? Does that make stable coins irrelevant? And does that create a potential crash scenario if people all of a sudden are exiting? Let's say Tether is no longer tethered to $1.
It's interesting because when you actually look at the stablecoin market cap, it's been going down. So it's almost like people, like the market kind of knows that this is happening. And a lot of this is because BUSD, right? BUSD. If I just quickly pull up the BUSD market cap chart here, you can see that one's responsible for a large part of the decline, and as well as USDC has been going down. So that's the wrong chart. But yeah, I do think that there is some element there of stablecoin relevance is fading to some degree. And I don't know. With regards to the CBDCs, I've talked about some of those on some of the other live streams I've done, and I think you have to imagine that while I think everyone in crypto is sort of we live in a bubble, right? No pun intended, right? But there's a lot of people out there that don't necessarily value the same things that people in crypto value, and so I could see a lot of those people not really caring if they lose privacy or other things, right? Like what's important to me might not be important to everyone else. So look, I do think that there is a risk of a CBDC coming. I know some states like Florida are moving away from that idea, but I could see it being a possibility in a few years. And I believe some countries are already starting to test it more so than the United States. I believe that is the case. So yeah. Look, my general thought process on crypto in general is that Bitcoin will stand the test of time, and it could get absolutely wrecked in some of these higher risk scenarios, right? Like if any of these major stablecoins collapse, or if we get a major recession, yeah, like Bitcoin could collapse. But I do think that Bitcoin will eventually recover and go on to new heights. I think the bigger issue is that the use case for a lot of the altcoin market isn't so obvious. Okay, that's I think the bigger issue, and so yeah, I think that's a good point.
Yeah. So I wanted to turn attention a little bit more to the macro side, and we can still touch on crypto, but I want to get to macro stocks, some other stocks and so forth. For instance, I'm looking at a chart of NVIDIA right here, which is having a nice little dump. If we go to the 10-minute chart, pretty sharp drop here on an intraday basis. We've seen the stock market on the NASDAQ at least reverse early gains and come down, although still holding some technical support. But a couple of things that I wanted to talk about was, number one, last week we saw UK inflation ridiculously hotter than expected. Then a few days later, Japan had ridiculously hotter inflation than expected. I just saw in the overnight, the business climate index fell much more sharply, which basically says a longer recession. I think for the most part, already Europe's in recession. But we're now looking at data that is telling us that there's a bigger likelihood of a longer recession. And then the bigger question is, you have the stock market at 52-week highs. We have Bitcoin at these highs. Is there coming, number one, is if Japan and the UK have higher inflation than expected, is that going to be what we're going to see in the US? And then are we also going to see this global recession? And I guess the bigger question then is, how does the stock market react? And does then crypto sell off as a risk asset, which I assume you would agree it probably would at this stage of it, with Bitcoin at least.
Yeah, look, crypto is a risk asset. It just is. I know some people are more of the opinion that it's not, but as far as I can tell, it's always traded as a risk asset. With regards to just sort of going through some of the things that you touched on with NVIDIA, because I know you've been focusing a lot, or you've been talking more about NVIDIA. I haven't talked about it as much, but I do have, there's one chart I have up here, where I'm looking at sort of the Bollinger Bands based on the 20-week SMA. of NVIDIA on a weekly basis. And, there are times where it certainly has reached these levels. You can see it's actually been outside of it and it's only recently crossed back in. And it can climb sort of that wall of worry. But normally what happens, right, is once it hits these levels, it tends to cool off or it tends to dump, right? One of two things. It either goes sideways with maybe a slightly bearish bias for a long time, or it just dumps back down. So, I mean, look, I wouldn't necessarily be surprised if NVIDIA pushed higher, but I think at this point, it's not really worth the risk, right?
Yeah, I agree with you.
You could even overlay like a 50-week or so. Maybe it was the yeah, I mean, you can look at different moving averages for the Bollinger Band and see that it has been at these levels before. But if you zoom in sort of any lower time frame, as sort of the months go on, it normally sort of fades that move whenever it reaches those more extreme levels. As far as inflation, I'm actually of the opinion right now that inflation is still very much coming down. I'm not saying that it can't come back in a future cycle. Like, I mean, we could have a scenario where the Fed pivots, we go back to QE, and people just go crazy again, buying everything and whatnot. And inflation comes back and we have an inflationary decade like we had in the 70s. But as far as I can tell, I mean, inflation has been coming down. This is inflation year-over-year approximation of contributions per category. If you look at even like transportation, it's actually deflationary right now. It actually dropped last month. So I still do think that inflation will come down.
Do you think it'll come down to the Fed's want of 2%, or like do you think we're stuck in a longer cycle of kind of not high inflation, right? But I mean, even though I think it's important to point out to listeners and viewers that inflation coming down doesn't mean prices are coming down. They're just not going up as fast. So they're still going up, they're just not going up as fast.
Right. Yeah. No, I mean, I that's a great point, right? There's a difference between disinflation and deflation.
Right.
Yeah. So it's also interesting because when inflation's high like this, it can also lead to inflated asset prices as well. Like everything goes up, right? Groceries go up, asset prices go up too. Yeah. So will they get back to their 2% target? I think that ultimately depends on if we get a recession or not, right? I mean, the recessions are notorious for actually bringing inflation back down. And then you have a bigger risk of, do you go into a deflationary environment if the Fed pushes too far for too long? And I mean, I'm still of the opinion that we're in the higher for longer camp, right? Like It's just there's been so much liquidity that needs to get absorbed. And the only way you're going to absorb it is to go push interest rates higher than most people can imagine and to keep them at higher levels for longer periods of time than most people can imagine. So I do think that inflation is coming back down, but 2% I think is only going to be achievable in a recession.
Yeah, and I think that's where it's going to get real tricky, right? So if you're someone who's looking at the stock market or commodities, even in gold or even cryptocurrency, it's not debatable that it is coming down, as you can clearly see on the charts that inflation is coming down. The question is, does it get back to a point that when we do hit a recession, and let's be clear, you can push recessions off a year. They could say, okay, this is a soft landing. At some point, we will hit a recession. And at that point, will inflation be low enough for the Fed to come back and inject more drugs into the economy to get prices or get the economy back on track? And I think that's the big kind of risk that people aren't factoring in. A lot of this is that if inflation stays, let's say at 3.5%, what if we do enter a bad recession and the Fed is forced to print? Do you then see inflation go, instead of from sub 2% to 9%, let's say 3.5% to 15%, right? Or do they just say, you know what, we can't print because we don't want 15% inflation. Therefore, we're going to be in a nasty, not depression, but let's just say a really nasty recession.
I would prefer the former option where like we just rip the Band-Aid off and get it over with and get inflation out. Because look what happened in the 70s. We had a peak and then we ended up going to a higher peak and then a higher peak after that. And this took place over 13, 14 years. And if you look at the S&P during that time, it just went sideways for like 15 years where we put in slightly higher highs and slightly lower lows. And no one really wants to be in that environment, I think. So look, I hope Powell means what he says, that they will stay the course until the job is done. Because if they don't stay the course until the job is done, then they could just make the same mistakes they made back in the 70s.
Yeah, and I think what's important to recognize for people watching and listening is that cycles are a natural part of everything. You have the months in a year, you have the seasons, you have cycles. We as humans have cycles, right? And so when you just let nature take its course, the cycles are very kind of gentle rolling hills, right? You have your recessions, which are a lot more gentle, and your expansionary periods, which are a move up, but it's not ridiculous. When the Fed has gotten involved in messing with the system, right? It's like taking a bunch of drugs to keep yourself high. You then create these negative repercussions when we finally do come down that are much, much worse. And I think that's something to remember, is that I've never been one to say, hey, a recession is really bad. It's needed. It's a reset. But when you screw with it and create an expansionary period like we've had since 2009 with so much money printing, to me, it sets you up for an inevitable crash or depression at some point down the road, unless they stay the course, like you're saying, and just say, hey, we're not going to get involved this time. Then maybe we don't have a depression.
Well, and I mean, normally when we have high inflationary periods, we actually are in a recession when inflation peaks, is what normally happens. Yep. But the reason why this cycle is so wacky is because, again, in those prior cycles, the Fed funds rate, right, like interest rates, were basically tracking inflation as inflation was going up, right? Like the blue line was staying above the sort of the white line, right? So I mean, like it was sort of tracking it. But this time you have something completely different, where the Fed basically ignored inflation and only started raising rates basically not too long before inflation even peaked. So I think that's been an issue as well.
Yeah, well, it was supposed to be transitory.
Right? Yeah. Inflation was supposed to be transitory, but it wasn't. And now we have to pay the price.
Yeah, and that's. I mean, I think that's where the Fed is, and not to get off too much from the charts and the data, but I think the Fed's kind of in this position where they finally, like they were. I do believe that the Fed was always like, hey, if we make the stock market go higher, it'll fix all the problems. It's like trickle down economics. You make the top really rich with the investments, and then it trickles down. And then very clearly, once we saw inflation and prices jumping, it was clear that wasn't happening, because you had people at the lower income levels where their income wasn't able to afford a 10% increase, 20% increase in prices. And so they had to say, oh, wait a minute, this isn't working. We need to now fix inflation. That's the bigger issue here, because otherwise you just get, the wealthier get wealthier and the low income just stay at the bottom. And there's this divergence, which we've seen for the last 20, 30 plus years, right? I mean, this divergence between wealth and inequality, essentially.
Yeah, for sure. All right, should we touch on any commodities before we
I think so. Yeah. Let me show my gold chart, if you don't mind. Let's go to gold real quick.
I am actually interested in your views on gold, because I think it had a nice pullback over the last couple of weeks.
Yes. So my downside target was anywhere between $1,900 and $1,915 after we hit the triple top. And I'll just explain to everyone for educational purposes. Double tops are the ones you expect the biggest pullbacks on. Triple tops are usually shallow pullbacks before a breakout. And so what we saw here is, here's your pivot high in 2020. Here was your double top and your big pullback. Now we've broken above. So see this kind of down sloping trend line. We hit it, we pulled back, we broke up. Here's your triple top. Here's your retrace to the scene of the crime. And I would expect personally that you're going to start to see a significant move up and a final breakout on gold before year end. I do expect new all-time highs. So it's following the cases, interestingly enough, and I love showing this too, is that if we go back to the charts in the 70s, so I love showing this. So let me go back here. So what we basically have had, we've had a move up in gold, and I'm just going to quickly get rid of these lines so we can clearly view everything I'm going to say here. So if we look at, I'm going to use arrows. So we have this move up, right? And then you have this consolidation phase, and then this. So again, 2 years up, 2 years of consolidation, and then we potentially are starting the breakout phase. If we go to the 1970s, it's almost a replica of that. Here you can see you had 2 years of up move, 2 years of consolidation, and then you start this bigger wave of buying where believe it or not, gold actually did about a 9x. Now, I always say to people, I'm not in the camp. I'm not like crazy enough to say, hey, we're going to do a 9x on gold. I don't think that's the case. But I do think over the next, what was this, from 1977 to 1980? So in the next 3 years, do I think we could double gold? Yeah, I do. I do think that based on what I think a recession could bring with elevated inflation, that we could actually do it. But the charts are very, very similar. The 2 years of consolidation before the bigger move took place. And interestingly enough, the initial move here, if we look at the time from this bottom in late 76 to when it double topped right here, that was basically a year and a half or so. And if we go to the current chart, the consolidation after that move here from the low from 2021 here was about a year and a half, or get closing in on a year and a half. So it's just a lot of similarities on the gold chart to the 1970s. And yeah, it's not going to be perfectly rhyming, but I do think that, or mirroring, but I do think it rhymes in general what we're going through.
Do you think we need to get back to QE before gold will make that move, or do you think it could come before that?
I think it can break out before that, right? But I do think the ultimate, like that mega spike that occurred into the 1980s, where it was like vertical, that's probably just like where I think Bitcoin takes off. That's probably where gold goes vertical.
Okay. Yeah, I mean, I probably make one video on gold each year because it moves so slowly compared to, like, you know, all the cryptocurrency assets. But I am still relatively bullish on gold. There's just like logarithmic regression chart that I don't really put as much weight in as the one I have for Bitcoin. But there are some interesting trends here, kind of like the sort of like an undervaluation phase, an initial move higher followed by a retest, and then sort of a spike up to your final blow off top, right? So then you have your sort of your undervaluation phase, sort of your first move up, kind of coming back down here. And then I'm curious if we're going to get sort of the same type of move that we got in the early 1980s. And what's interesting about this chart, though, is that this move here by gold in the early 1980s came out of that period where we were coming out of the period of high inflation, right? Because we had just been in a period of high inflation for the last like 10 years, and it was coming out of that period that sort of gold actually had its major blow off top. So I am interested in potentially seeing something like that play out again.
Now in terms of your portfolio, like do you own gold, or is it more just Bitcoin and safety of Bitcoin, or how do you kind of allocate?
Yeah, so I mean, so I've said this many times before to my viewers, and every single time I say it, they're always like taken aback as if like I'm against them, you know. But my equity portfolio has been and will probably always be like 3 to 4 times larger than my crypto portfolio.
Yeah.
Sometimes that changes during peak phases and mania in crypto. But the reason you have to think about this is because, like, think about it like this. You know, Apple is putting in new highs, right? Like the S&P isn't even that far off its highs. Go look at any altcoin. Most of them are like 85, 90% down, right? So like, yeah, you can believe in an asset class, but not have your entire net worth associated to it, right? So if crypto drops 80% tomorrow, you don't want your net worth dropping 80% tomorrow. Typically, where I have been in the past, I was my precious metal allocation, say like gold, silver, palladium, uranium, those sorts of things, have been about 5%. But starting at the beginning of 2022, I upped that closer to like 6 or 7%, just because I'm now of the opinion that precious metals will likely outperform, or not necessarily outperform, but like I think that they will do pretty well over the next 5 years. So I just increased my allocation slightly, but nothing too crazy, right? I think about a 5% weighting. Somewhere between 5 or 10% is probably the most ideal for me, because I don't want to have 80% of my net worth tied up into gold or something.
No, but I also think it's important for people. Like I think there's this, especially amongst newer investors, where it's very much like, well, why would you want to be in gold? Why don't you just go in Bitcoin? Because they're assuming that Bitcoin will return X%. But when you're managing a portfolio, and I always remind people that when you're managing your own money, you're basically a hedge fund manager. So you have to hedge sometimes. You have to analyze risk versus reward. And sure, Bitcoin probably will outperform over the long term. But the key is, does it flush to a point where it scares you enough to freak you out and you exit panicked, right? As opposed to where gold is, where you're not going to get 10x on gold. You're not going to get 5x on gold in a short amount of time, but you sleep at night a lot better and you make money slowly. So investing is a combination of taking risks with portions of your portfolio, and then also putting it in something where you think that you can outperform inflation and just grow your wealth in that way.
Do you have any opinion about the relative valuation of silver against gold? Because you mentioned earlier that a triple top, you can get a pullback before it ultimately breaks out. And I have the gold silver chart pulled up right here, right? You can see there was a top here in 1941, a similar top here in 1990, and then sort of we've tried to break through that here in 2020. I'm kind of curious, like, I've been thinking about this as well, because like, you have your Bitcoin, and you have your Ethereum, and you have your altcoins, but you also have gold, and then you have sort of like the altcoins to gold, right? Like
Right.
the other higher risk plays. I'm kind of curious, do you have any opinion about whether you think silver might outperform gold, or do you think gold will outperform silver?
I think longer term silver outperforms gold. So if you were to ask me 5 years out, I do think silver outperforms. I think that in the near term, silver is the riskier play. It's the altcoins of the metals, right? Because you
Right.
have the industrial side. So yes, it's used in batteries for like electric cars. But if we enter a recession, then there's less demand for that because people don't have the money to buy those. So there could be a little bit of pressure on silver in the near term as we get into this potential recession and through it. But I think longer term silver, I think that chart to me tells me that at some point we break out.
Right. Yeah. All right. I was just
Yeah.
curious.
Yeah. And especially because you can kind of connect those lows, even there's a trend line of bumping up those lows, and it creates almost a wedge pattern with the line across the flat line
Well,
across, and then the upsloping one from
this
the very low in 1968 kind of to the low of 2013, right?
this is the gold silver ratio. So
Right.
gold divided by silver.
Gotcha. Gotcha. Okay. There we go. Yep.
But yeah, I mean, it's an interesting chart for sure. And I mean, there's other charts as well. Like, I don't know if you follow copper, like some of those other ones,
Yeah.
like the gold copper valuation is so some of these other ones can provide or some signs of like risk on, risk off. But yeah, I'm curious if you have any other opinions about any of the other commodities.
Yeah, I mean, for me, when I'm looking at it, and I'll show my chart here on copper. Copper's in this what we would refer to as a wedge pattern, right? So you have the same basic chart pattern where it's basically you have a high and a low, and price has been between those, and that's what creates wedge patterns. We talked about this when we were looking at the previous chart, going back to the beginning of the stream, is that you have higher lows but lower highs, and that creates a wedge pattern. What's interesting on copper is you're coming to the kind of the head of the wedge. So you're going to either break out or you're going to break down. And usually when that happens, there's been so much consolidation. People should think of consolidation in a chart as kind of rejuvenating, or like, you just ran a marathon, which was the big move. Now you rest, eat some pasta, you get ready, and then you can run the next marathon. So it's usually a big move, kind of an explosive move. So I don't know which way this will go based on my economic projections. I'm going to guess it breaks down. But again, there's no guarantees with a wedge pattern. I've seen them go both ways.
Yeah, I feel like there's a lot of patterns like that. Like there's the Ethereum Bitcoin valuation that, higher lows and lower highs. There's the Bitcoin dominance, it's higher lows and lower highs. And I just keep wondering, like, well, which way are they all going to break? Is it the higher lows that are important? Is it the lower highs that are important? By the
Yeah.
way, the dominance excluding stable coins, you know how you were drawing the lines connecting sort of the dots on the dominance?
Hmm.
Excluding stables, if you connect the dots, they don't converge until 2026.
Wow.
Which is kind of crazy to think about, like 2020, we might not have a real resolution on some of this stuff until 2026.
Well,
Um,
and I'll just throw this out there, but if you look, so the Nasdaq and and this is, let me go back even further. So when Bitcoin was at 69,000, one of the reasons I was so skeptical is to me, I lived through that .com period in the late 90s into the 2000s, and I saw the hype. And if you think about it, the .coms, the internet, everyone was like, this is going to change the world, and it did, but it didn't preclude hype from driving things to ridiculous valuations and then collapsing. And it took 15 years for the Nasdaq to make a new high. Well,
right.
you had the same hype in crypto, and we've seen it with these ridiculous, Pepes, and I mean, heck, even the altcoins that are serious go to ridiculous valuations. And again, wouldn't that be a kicker if for some reason it took, even just 2026 would be a shocker to everyone, but let's say even further before the Bitcoin market flushed all the crap out and then was able to make new highs.
Right.
Pretty
One
crazy.
thing I keep going back to with some of these precious metals is I think that they are really good at telling you like risk on, risk off, or telling you like if inflation is going to potentially be an issue. So like I am still of the opinion that we are in a disinflationary process, and we're more likely to see disinflation than the reacceleration of inflation. But the one chart that has me a little bit cautious is this one, and this one shows this is basically the price of copper, like so CFDs on copper, and it has overlaid here the U.S. inflation rate. And what you'll see is like when copper goes up, like when it starts to go up, it can precede a surge in inflation, right? So like copper goes up, inflation goes up. Over here, right? Copper started going up, but inflation didn't really bottom until a little bit later. So I have been watching copper over the last few months because it kind of made that move to the upside, and it's this month it started to move up a little bit again. And if going back to your chart, if it does break back out to the upside, then is that a potential sign that we could have another surge, in inflation? And if that's the case, then maybe everyone is underestimating what the terminal rate will be for the Federal Reserve. Like maybe even 5.5% is too conservative. Which I mean, 5.5% has been sort of my 5 to 5.5% has been my target for a long time. But I that's sort of the one thing that kind of keeps me second guessing, I guess.
And I think also it's important to recognize that, like, the Federal Reserve, the velocity at which they have raised interest rates has been unparalleled in history. And I don't mean that interest rates in the 70s and 80s didn't go up more, but we weren't at such a low level. So if you look at the percentage, like 10x, 100x, whatever it was, it was much, much more. And remember that in raising interest rates, it doesn't get reflected in the economy for 6 to 12 months. And so you could argue that maybe half of the rate hikes that have been done are still not reflected in the economy. And so it's very interesting to see the Fed still saying, hey, we have to raise more because of inflation. But they also have to know that the reflection of what they've done isn't fully in the system. And remember, let's keep in mind, we've already seen bank failures, right? I mean, what happened to the regional banks, Silicon Valley Bank, that was a direct result of their risk management, but also the fact that the Federal Reserve raised interest rates so quickly that they were just caught off sides. They acted too slow. And to me, when you look at commercial real estate and what's going on, I mean, I don't know if you've been paying attention to what's going on in California. I mean, literally, businesses are just walking away and they're like, we're not paying any more on these buildings. This is useless. There's no point. And there's so much dead weight. Like, you could have some major bank failures coming as well. So you throw in a recession, bank failures, and a bunch of other stuff. And to me, I don't think the Federal Reserve or the U.S. government's even close to being prepared, especially with all the new debt coming from the debt ceiling deal and everything like that.
One thing I keep thinking about is people say, and I feel like this really is my first business cycle, like full business cycle, right? Not including what happened with the pandemic, because I feel like that one was sort of like an outlier. But they always say, like, watch what the Fed does, not what they say.
Right.
Because what they say is completely different than what they do. And the one thing I can't get away from is, Powell comes out every week and talks about how bad inflation is and how soft the labor market is. If it's really that bad, how tight the labor market is, right? If it's really that bad, then why did they skip? Why did they skip? So I keep thinking that there's got to be some of these members at the Federal Reserve are looking at some of the data points and saying, things are getting a little weak in some areas. Why not? Let's just pause and see what is the bigger risk, right? Will inflation keep going down? Or, are we really about to push us into a pretty bad recession? So I think that there is some element of people. There are some people here at the Fed that are getting kind of worried about, how much damage will ultimately be done. Because I think you're right. I mean, I think it can take upwards of a year for interest rate hikes to be felt. But I mean, at this point, I guess the markets overall, I mean, with the exclusion of altcoins that have not been doing that well, but the S&P, Bitcoin, they've continued to climb the wall of worry for quite some time. And I imagine they can do that until you actually see a major change in the labor market. That's sort of what my opinion is right now.
And I do think you are onto something, and we'll wrap it up here. We're almost at an hour anyways, but I do think you're right in that. I think the Fed looked at the stock market and said, wow, look at this. We're ripping. The stock market's ripping. Look at NVIDIA going up this and this. And they can't just be like, hey, we're going to pause, because the market will go even more nuts. So in a way, they have to be like, okay, we'll pause, but let's make sure that the market doesn't get ahead of itself and create another bubble, because then that's another thing that's going to help add to inflation. And I think that's another point to make, is that you have Europe. Europe's now looking at higher inflation for longer, and the European stock markets are basically at all-time highs. I mean, they're gone nuts. And so I think you have to look at that same thing in the US, is that does a stock market rising increase inflation due to the wealth effect? So
yeah, no, I mean, I think look, the Fed's in a tough position, right? I mean, like, no matter what they do, it's kind of a tough outcome. If they don't do enough, we could get another, we get another bubble. If they do too much, they could push into a recession that lasts for 1 to 2 years. And that's, neither scenario is really a great scenario to be in. It's a tough place to be. But anyways, I think you're right. I think we should probably go ahead and wrap it up. If you guys, if you're following me, if you're watching this on my channel, make sure you go subscribe to Gareth's channel as well. You can also find him on Twitter. He's quite active, and just for your reference, I mean, he's definitely a different type of trader than I am, which I think is a great thing, right? You want to follow different types of views. So make sure you guys follow Gareth if you're not following him. And I will make sure the links are in the description.
And I will say the same thing. And Ben, what I love, like the stuff you show, the charts that you go over, I do not go over. Like the comparisons, the data you have, it's actually phenomenal. In fact, I will say that I am gaining a lot of insights from just being on here with you. So I thank you for that, and make sure to follow Ben on his stream if you're watching on mine, and make sure to follow him on Twitter, and think about signing up for his service. I think it's a no-brainer to get all the information. Remember, our job is the No Shill Zone. We're going to give you guys our opinions, but based on data that we're seeing and the data that we're showing to you, and then you take our opinions and you do what you want with them. You decided, do you agree, do you not agree, and you go off and you can watch 5 other people too. I'm all for that too. The more information you guys get, the better. Then you make your own decisions. And again, that's all we can do here. So thank you, Ben. Yeah, buddy, man, it's these are great. These are fantastic. And I thank everyone for tuning in.
Yep, sounds good. All right, guys, make sure you subscribe.
And we'll see you next
thumbs up. We'll see you
next
time.
Monday, 11 a.m. Be back here, guys. We'll see you then.